Hello everyone, welcome back. We're doing another trade recap video today. I'm going to go over a couple trades that we had at the True Trade team this week. I'm going to go over one winner that we had and one loser that we had. I think it's always good to reflect on your losers and, make sure you think about what you could have done better. And even if you couldn't have done anything better, even if the setup was great and you executed well, you know what? Sometimes there's still going to be losers. But typically, losers do have something to learn from. There's usually a mistake that was made. There's usually maybe you shouldn't have taken the trade at all. Maybe you could have executed better. So I'm going to go through this trade on Boeing that I took today. And we're going to go over maybe what I could have done better, or if I should have taken the trade at all. Maybe notice some things that I missed in my analysis that would have kept me from taking this trade in the first place, okay? So, this trade was taken on Friday, so this trading day on the right here, most recent trading day. And here's how it went down. Basically, Boeing, looking at a daily chart, obviously I always look at daily, and I'm aware that we are at a major support area here, and I'm aware that we may see a bounce. And so I think the first thing I did wrong here was thinking that Boeing was, I guess, quote-unquote bullish. I don't necessarily think it's bullish, but I was expecting more upside. Or I was on the lookout for it, right? So that's kind of what triggered me to notice this play in the first place. And if we go to an hourly, this is what I was watching, was an hourly chart. And this green candle right here, this breakup candle, was the first hourly candle of the day, 6:30 a.m. Pacific. And so what I noticed after it closed is that we closed above by about a couple pennies here. This breakdown candle high. We closed barely above it, you can see there. Okay. So I saw this as a bullish sign because typically when there's a breakdown candle, that is a bearish pattern. If the price comes up, it's typically going to continue down until it's broken above. And I also noticed that it had come down towards this gap, which has not been filled yet, and it didn't quite reach the gap, and it took off like that. And so I saw that as bullish behavior because there weren't enough sellers to be able to fill the gap. Therefore, Boeing must have been strong. Then it closed the hour above that breakdown candle high. And I was like, okay, this is looking pretty good. And so what I was looking for was a retrace for entry down to about where this candle opens and where this day closed, right? So that's a clear support level here. So I looked to retrace entry around here. It did, as you can see, find support there. Here's that support. And I was up on the trade, and I was only in a partial position here. But then it continued down. And so I said, okay, well, I see another maybe area here on this chart. It's about a 50% retrace of this candle. Let me add on a position here. So I added on into a full position around this price here, around 331.5. And it kept going, right? Clearly this trade didn't work how I would have hoped. If we scroll over here, I can show you something like this here is how I would have hoped this trade would work out, or something like this here is how I would have hoped this trade would work out. Now, I'm going to take you through a few reasons why I probably shouldn't have taken this trade in the first place. And sometimes this trade would have worked out. But I'm just noticing things after going back. And so here's a couple reasons. First of all, the trend is obviously down. We can realize that it's at a bounce area, but here's the deal. When a stock is at a bounce area and comes in hot and heavy like this, with high volume, extreme speed, the best time that stock has to bounce is the first time. The first time it comes to the level. That's the best time that you can play the long side off that bounce, or the short side if you're playing a top. So you can see Boeing obviously came down initially, and if we go down here, look at that bounce, right? It bounced one time, continued a bit lower, had a nice bounce. And right, so here was the time to do this long play. You see a high volume breakup candle, and you wait for that retrace down to another support here, and it turns into a 1 or 2 day swing here, and it's a pretty nice trade, right? It works out pretty well. So that's number one. The best time is the first time on a reversal play like this, and this was not the first time coming to this area on Boeing. Okay. So that's first thing. Second thing I noticed, we have a gap up here. It was a pretty big gap. It would gap down. And essentially Boeing has been bear flagging, right? It's been a down move, and now it is going sideways in a channel. This will typically lead to a move lower. Now, the one thing that you want to note here is how does it act when it gets back up and tries to fill that gap? And this is what I didn't really pay attention to at first. I wasn't really looking up here. I wasn't analyzing how Boeing had acted in the previous days, which is, I think, where I went wrong here. I wasn't really looking far back enough. And it's always key to know how a stock is acting around a gap, even when you're day trading many days later, because it gives you the right sentiment, the right bias. So we can see Boeing came up here twice, and it rejected below the gap pretty harshly. We see a nice reversal candle here. Look at the volume. And we see another one here that slices right through the closing price of the previous day like it's butter. No support whatsoever. Cuts right through it. Can't get anywhere near the gap. Okay. Then it cuts below what? The opening range low from that day, from this gap. Which means what? It's likely headed to fill this gap. Right. So there's two things. There's two major things here that I think I could have noticed better on Boeing, that would have maybe led me to not take this trade. Okay. Regardless, sometimes this trade might have worked out. But I think those two things, if I had noticed them ahead of time, maybe analyzed a bit better the previous day's action, and just those two key concepts of noticing how price reacted at this top gap, and the fact that it was not the first time down here. It wasn't the initial spike down and bounce. Those two things, they should make me stay away from Boeing. I should want to stay away from Boeing, stay away from trading Boeing unless it comes down and breaks this support, or it gets back above this major gap showing bullish behavior, and then it would probably be headed for one of these retracement levels. Okay, so there you have it, guys. I took a pretty sizable loss on Boeing. I think it was 20 or 30% loss on my option contract. Technically, there's still nothing wrong with this bearish pattern, because it's not really invalidated until this breakup candle low is broken. And even then, maybe this gap holds. Maybe it keeps bouncing. But I had a closer expiration. I was looking to day trade or maybe do a 1 day swing. So I went ahead and cut it. Um, and that's how it goes. Sometimes you have to know how to take a loss, even if it's going to bounce back after. You can't keep making a new stop loss up over and over again and let the loss grow too big. Don't do that, right? Make sure you size appropriately, and when you cut your loss, it's 1 or 2% of your account, whatever your number is, as long as it's not too big. Take the loss and run away. Analyze the trade later, see what you could have done better, and move on. Okay. So one more trade here I want to analyze from this week is Bank of America, and this was another call trade we had, and this one was a short swing. This was also based off an hourly chart entry, and this was a nice flag here. Okay, this was a nice flag play, as always, connecting the trend line to the candle, closes, close, right? And we finally had a break in this day here on, what is that? I believe that was Monday. Yeah, on Monday of this week. And we started closing hourly, once, twice, 3 times above that trend line, just hanging on it. And so I really like the look of this. And we have this breakdown candle high. Like I said, we want to watch out because that can turn bearish at the top of that. We see the rejection here. But one thing I really liked about Bank of America, first of all, we had the flag break. Second of all, underneath this breakdown candle high, in order to get a rejection, you want to see price come up here and reject on this candle right here, or this candle. You want it to come up and reject quickly. Once price has already been up here for 3, 4, 5 hours, and then it has this candle, it's not quite as significant. It means price is not really rejecting this general area, and it's likely headed higher. So we went ahead and stayed in that trade. I was using a stop loss at minimum back under this flag. Really, this breakup candle low would be a great stop loss because that is the breakout area, was right here. So if you've gotten back below that, that really invalidates the breakout. So yeah, that would be a stop loss. This didn't quite take off quick enough, so we ended up swinging this. We had contracts that were a week out next week, and so we had time on our side here. And yeah, this turned into a really nice play. I think I had 10 contracts on this one, and I was booking profits throughout this day on the rally while IV was nice and high. You can see this rally right here. So really nice. And then I went ahead and kept a couple, and I saw that it was actually bear flagging, or bull flagging, excuse me. We had a breakup candle. The low of it was holding and moving sideways, which usually leads to higher prices. Sure enough, we did get a higher open the next day. I was able to sell on that open, and yeah, it was a great trade. Here's my log, and we can see, let me get this, there we go. We can see Bank of America here made a nice 52% on that trade. Okay. If you're wondering why all these zeros are here, I have a bunch of swings open right now. So those are my swings. I've been entering a lot of swings in the retail sector, in the communications sector. I've been rotating into industrials now. I'm mostly all out of tech swings. We haven't really been doing much tech. We had a bit of Apple and Baba this week, but the market is really getting extended, so we're staying away from tech for now. We're looking into sectors that don't follow the market as closely. So, yeah, and if you're wondering where I got this top level from, Bank of America hasn't been up here in over 10 years at this price. So I actually went on a daily chart all the way back and I analyzed some levels on this daily chart where Bank of America could stop from this breakout. So here's the area where we were at. You can see we started this breakout. It was here, around here at 35.25-ish. So, down here. And so one important thing, we had broken over this gap at 34.48. So we had some room on the upside because gaps are always important. And that gap also coincided with these highs over here. So we had broken a nice level. I honestly could have seen more upside in Bank of America. I'm surprised we rejected as hard as we did, but the market is extended. It might need a break for a little bit. At this time, the SPY is trading very high. It's just been going straight up, so no surprise that it might need a little breather. Anyways, what I'm marking here is basically any pivots that lead to a multi-day directional change. So I've marked obviously these pivots here that coincide with the gap. I marked this pivot here because it was close in price, and that's actually the price where we rejected at. So I tried to find anything just above that that could have been important. I like to say always look right to left and find the nearest candle, which would be this candle. But it's quite unlikely that we're just going to shoot straight up to 37, 38. So I was looking for levels in between. So that's where I found that level. You can see I also marked some other levels here. And these are just from the closes of these days here. I just wanted to find anything that was just above that could act as a resistance. So that, I found that candle here, the close of that. We can clearly see the Bank of America tried to come up here, closed on that level, had a big drop, came up, broke it, came back and closed right around that level again. So I figured this zone could be important. So that's the next zone I have. And then you're really looking up in this zone where all these pivots are, right? So yeah, that's how I found it. That's how I kind of analyze levels that are very far back, trying to find anything that could be important. But yeah, Bank of America was one of our better trades this week. Very nice flag breakout. I love flag breakouts. Nice and clean. So yeah, guys, subscribe if you haven't. Please like the video, and please share it if you think anybody could use this information. It's really difficult to get started as a YouTuber, and the best way is honestly, if you guys like my shit, then share it with your buddies, share it with your trading friends, your Discord channels, whatever you got. I would really appreciate it. But yeah, you guys have a good night, have a good day, and I'll see you guys in the next one. Thanks for watching.